Hey everybody, I am Kevin Clark, the co-founder of Plan Confidence, also known in several circles as your cousin Kevin. Hey, happy 4th of July weekend. Earlier today, if you're using our Plan Confidence service, you should have received at 9 a.m. Eastern time an email or a push notification letting you know to go in and check out the very specific advice on how to manage your money. And it's a new quarter, so we're doing rebalancing as well as changing those future contributions. So I just wanted to kind of let you know exactly what we're doing. One, we rebalance to control risk, not to enhance the returns. We want to get you back to that risk. So if we start out as a moderate investor, we're 60-40, 60% stocks, 40% bonds. Aggressives 80-20. As the quarters go on, we want to get back to that allocation. We change the future allocations on a monthly basis so we can take advantage of any of that volatility that the markets always give us. So we've got two components going on in your 401k that we look at on a monthly basis: your future contributions, quarterly rebalancing for the strategic allocations, meaning they're always going to be fully invested, and then the semi-tactical ones we normally do on a quarterly basis, but possibly could raise cash throughout the quarter or the month as well too, given the market conditions. And we came close a few times in the past month as the market's been fairly volatile, and right now we're on a nice upswing. So we'll see if that can continue. And just to remind you, last quarter we actually made some big changes. So if you haven't looked last quarter, go to planconfidence.com, scroll all the way down, click on the section that says blogs and vlogs, and then you'll find the second quarter update there. So you'll have all my reasoning on the big changes that we made last quarter. Now, this quarter, we're not making such dramatic changes. Realistically, the only change that we're making is a slight decrease to the amount of money that we have in large cap blend, which is in between value and growth, and we're moving that money into large growth stocks. So we're getting a little more aggressive with the large stocks that are in the portfolio, the names that you would know. So they're not the small or the mid cap stocks or anything of that nature. Reason being is if you look at the year to date performance on such things, you can see energy is just crushing it, up 42% year to date. You can see on here most of them are value. They're all value oriented. However, when you look at the quarter to date, you're going to see a lot more growth and blend in there. So there's a risk on going on with the markets over the past quarter or so, from that, hey, let's be a little more conservative, let's buy value stocks, companies that are out there making money should survive, to, okay, we're going to take a little more risk, move into the growth categories or ones that we think can actually start to really start to accelerate. So we're internally shifting just a little bit of the money just to take more advantage of the actual current trend, and that is moving out of those big cap dividend paying stocks to more of those growth oriented and oftentimes technology stocks. Year to date, value has been doing better. Value and blend are up over 18%, 50% respectively, with growth being up about 12%. But the trend is that out of that 12%, 10% of that return came from the past quarter in growth. So we're going to have you rebalance. If you haven't done that already, please go ahead and do so within your account. And again, if you're using our software, you would receive the very exact allocations given the options that your employer allows you to use within the employer plan. If you're not, feel free. Here's exactly how we did it. We've got 5 models: income through 100% equity. Here's the percentages that we put into each category. You would just have to go in, identify the best fund for each category within your plan, and then put that percentage of the money there. But other than that, we are steady Eddie. The reopening seems to be going pretty well. We'll see if that can continue throughout the summer. Hopefully we don't get any big shocks. The summertime tends to be a little more volatile because a lot of traders, a lot of advisors, a lot of the public, they tend to go on vacation. All those New York traders are in the Hamptons right now. So it's very easy to move the market in the summer months. There's an old saying, sell in May and go away. Why? Because the kids get out of school and everyone goes on vacation, and we get serious after Labor Day again. So we'll see if that that continues on if that's the trend or not. But these are the allocations that we're using right now. If you're using the strategic and the semi-tactical models, you would have got those rebalance instructions this morning. If you have any questions, do not hesitate to reach out to me or your advisor that's providing you the Plan Confidence software. And other than that, I do want to thank you for using Plan Confidence for the advice for your employer-sponsored plan. Please tell your friends and family and coworkers that they too can have confidence in their plans, because we're just a couple clicks away. With that, this is your cousin Kevin saying have a very safe and happy 4th of July. Peace.